Side hustles and Schedule C risk, why the IRS focuses on sole proprietors. If you run a side hustle reported on Schedule C, ride share, delivery, online sales, consulting, etc., the IRS often flags these returns because automated systems look for mismatches and high-risk patterns. Misreporting of wages, W-2, is rare, 1%, while misreporting of sole proprietor income is estimated near 55%, a major source of the tax gap. As a result, sole proprietor returns are audited far more often and taxpayers lose audits at very high rates. How the IRS finds issues. Automated matching compares what third parties report, 1099K, 1099B, W-2, with your return. A mismatch may trigger a CP 2000 notice proposing adjustments. It is not a bill but a data-driven query. Not receiving a form does not obviate tax reporting obligations. Taxable income must be reported regardless of form issuance. Top red flags. Home office. The deduction requires exclusive, regular business use and strict documentation, measured space, photos, expense allocation. Mistakes, ambiguous spaces, guest square footage, mixed personal use, invite scrutiny. An accountable plan reimbursement from a corporation can remove the deduction from your personal return and reduce audit risk. Vehicle deductions. You must keep contemporaneous mileage records, dates, odometer start/end, purpose. Claiming 100% business use without clear evidence or failing to track miles invites denial and recapture on depreciation. Consider the standard mileage rate for simplicity, otherwise preserve receipts and a reliable log. Sloppy expenses and hobby losses, mixing personal and business accounts, overstating meals/travel, and repeating losses can trigger hobby loss rules and audits. Large deduction stacks relative to modest income make returns look non-commercial. Practical defenses and best practices. Separate finances. Form an entity, LLC or corporation, and use separate bank and credit accounts. Clean books show commercial intent and lower audit risk. Use an accountable plan if you incorporate. Reimburse documented expenses, home office, mileage, supplies, so deductions appear on the business books, not your personal Schedule C. Keep contemporaneous records, mileage logs, receipts, photos, and a clear computation of allocated home expenses. Document business purpose for travel and meals. Avoid excessive deduction stacking. Ensure deductions align with revenue and demonstrate a profit motive. Repeated losses can invite hobby loss treatment. Consider entity upgrades when profitable. An S corporation can provide payroll, accountable plans, retirement strategies, and more defensible reimbursements, useful once the business produces sustained profit. Quick side hustle checklist. Open separate business bank and credit accounts. Keep real-time books and contemporaneous records. Use a mileage tracker or log for vehicle deductions. Define, measure, and document any home office. Don't stack large deductions against low income. Show commercial intent. Consult a tax professional about entity structure and accountable plans when profits warrant it. Clean, well-documented deductions are the best protection. If you want a consult or guidance on bookkeeping and entity options, seek a qualified tax advisor who can review defensible practices for your situation.